following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is Billy Ray Valentine from 100 South Broad Street, Philadelphia, Pennsylvania, sitting in for the master himself. I feel like Ed McMahon following the legendary Johnny Carson. Folks, we're going to go back down memory lane here today since they're doing that money show in New York. I want to explain to you a little bit about the money show. It started back in 1999. Two of my students from Los Angeles, Jim Sugarman, who was in advertising, and Tim Borkman, who was a detective for the Los Angeles Police Department, started this thing. And they called me. I was in Tucson, and they said, we're having some traders coming together in Los Angeles. Would you like to come over and start the program? And it's going to be a 2-day event. And so you just figure there's a bunch of traders getting together, have some fun. So I had a pair of Levi's on and a polo shirt, and I went over to San Diego on a Friday night, drove into Los Angeles the next day. And lo and behold, the place was packed. I mean, there were thousands of people there. And as I walked in the door, there was Bill Griffith interviewing people. And I'd known Bill from the old days at FNN, Financial News Network. And he said, hey, how about doing a spot here? And so I did. And we talked about the markets a little bit and what was going on. And that was the start of the Money Show, folks. And it went on for, well, it's still going on. It's been 20 years now. It's now taken over by the folks down in Sarasota, Florida. Jim is living in Hong Kong, where he does similar type shows in different industries, and he also does some trading. And Tim also acts as a consultant for some of these shows, and he is still doing some trading. But one of my favorite memories that happened to be that weekend was Qualcomm. The earnings came out for Qualcomm that night before, and the stock was trading at about $620 a share. This was back in 2000, folks. The March they didn't top until March of 2000, and so it's several months more to go. But the earnings came out for Qualcomm, and the stock was called to be about $200 a share higher, and I was short from 620. And a man named Walter Pychek, who was with Thompson McKinnon, I believe, was a young man in his 20s, and he came out with this upgraded forecast to $1,000 a share, and people were absolutely going nuts for this stock, much like they are with Amazon. And so it was called about $200 a share higher. I was short 100 shares, so I'm looking at a pretty big hit here. And so I said, well, what I'm going to do is I'm going to give it the first 30 minutes, and if it's above that first 30-minute range, I'm just going to pitch it out. And it was it was the end of the year. I believe it was December of I can't remember. No, maybe it was no, it was in January, because I'd already it was in January, I believe. Anyway, the stock opened about $40 higher as opposed to opening $160 higher. That it was called, and it closed down on the day, and I ended up making a couple of bucks on it. But boy, talk about, being scared and remembering that, because at that time, Qualcomm was the Apple and the Amazon of that era, because they were the first ones to come out with this telephone chip that allowed us to be using these cell phones that we're having at this time. Another great memory that I have, I'm going to tell you a few of these because it's history and you might want to know it. If not, you're going to listen to it anyway, because guess what? I have the microphone. And the good part is Samuel Archibald Arrington Hits Crawford. Sam Crawford from Archer Perspectives will be our guest at the half-hour break, so you only have to listen to me for a little while. It was in 2004. I was there with John Hill. We were giving a class together, a live trading class for 3 hours during the Money Show. It was over the President's Day weekend, as I recall, and we were doing live trading, and John and I were in the room, and we started out very, very badly. I had about 3 losses in a row. John had a couple, and John whispered over to me, he says, the good part is, he says, we can go to Canner's for breakfast real early. We won't have to stay here for 3 hours. Well, what happened was the people that were watching us lose went out into the lobby there and started telling, hey, you got to come in and see these 2 guys, supposedly professionals, that are losing their butt. And they came in, and the fire marshals were complaining that the room was overbooked. And then all of a sudden, John and I caught fire, and we didn't have a loser for the rest of the 3 hours and ended up with a really great day. But that's just how it goes. You know, some days you have to kiss a few frogs to find a princess, and luckily with my mentor there, we did a pretty good job. And then, of course, in 2002, after the terrible tragedy of September of 2001, Tim and Jim had the option of canceling the show because if you remember, this was in February of 2002. That's just 6 months after you could still smell the airline stuff because it was so close. It was right at Times Square, so you could still smell the airline what do you call it, the jet fuel, and it was terrible. And one of my students, Jimmy. Gosh, I can't. Master Mateo he was a fire captain for New York, and he asked me if I wanted to go down to Ground Zero, and so I hopped in his fire department truck with the little one of those little SUVs, and he took me down into Ground Zero, and I couldn't get out of the car. It was so traumatic to me that I just asked him to take me out of there. Folks, I don't have a great stomach, but boy, let me tell you, that was more than this old cowboy could take. I never did forget that. That was just really amazing. Anyway, Jim and Tim did the show, and they had the backing of the Marriott because that's where it was. The Marriott says, we'll help you the best we can. We're not going to hold you to any debits or anything, so give it your best shot. And it turned out to be the best show that they ever had. Everybody in New York, New Jersey, everybody in surrounding states showed up, and it was standing room only. It was really a great show, and it was that enabled them to keep going. And then later on, about 6-7 years later, they sold it to the group down in Sarasota that runs the Money Show right now. But I did all of them from up until 2015, about 3 years ago. Sarah and I decided, it's just a long trip into New York, and even though we go to Philadelphia to see the kids, it just was, just a little too much, and so we didn't do it. But golly, folks, I tell you, I had so much fun at those shows. It was amazing. We did them everywhere. I've done, many in China and, in other countries too, the UK, but it was a lot of fun. Wow, where did this time go? I better shut up and talk about the markets, which I'll do. 877-927-6648. Larry Pesavento sitting in for the master himself, Tom O'Brien.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. This is Larry Pesavento sitting in for Tom O'Brien, who's at the Money Show in New York. We're going to look at the chart of the S&P going back since the market bottomed in March of 2009. As you can see, the corrections that we've had over the years. This last one that we had was 10%. That was the smallest of any of the corrections. Most of them were anywhere from 19%, 13%, 12%. This last one was 10%, and now we're having a very, very strong rally back, and we're coming into this full moon this week, and we're going to have Norm Winsky as my guest on my show on Wednesday, which will be good. We'll also have hopefully we're going to have Stan Harley, and then also Tim Bost, an astrologer, very famous financial astrologer from Florida, will also be in our guest. Within the next 7 or 8 days, I believe we'll be able to have him on. But what I wanted to talk about here before we have Arch Crawford here coming at the break is to take a look at what's going on here with the New York Stock Exchange Index, because that is the real market. And as you can see here, this is up to date. Where we are right now, as you can see, we're almost at the 61% retracement. That is near that gap that we had. We're 2 weeks into this rally now. Remember, we bottomed down here, really beautiful bottom down there at the 78% bottom of the August low, and it was a 61% bottom from the April low. So that was an important bottom, and as you can see how important it is, we've had this tremendous rally. Folks, this could be, that could have been a C leg of an ABCD structure that could take us, well into new highs. But I don't know if it's going to do that or not. One of the reasons that I'm thinking about that is that our good friend from wolftrader.net, Shane Smolian, has been chatting with me today, talking about the fact that the signal that he uses for the Fed juice has really hit a maximum level like never seen before, and at the same time we're having reduced volume. This doesn't make a whole lot of sense. So these next couple of days are going to be extremely critical here, because we're coming up into some severe resistance on the New York Stock Exchange Index. Not so much in the Dow Jones Industrial Average, which is only 30 stocks, and also in the composite, which is basically, you're only looking at a few stocks there, because those stocks are the ones that are really running the market. We had a big gap up today. That was one of the key things that we focused on in the newsletter this week, was the fact that if we saw a really strong market this morning, we're most probably going to be strong all day, which in fact is what we've done. We're not very far away. We're within just 2% in the NASDAQ. And if that's an ABCD structure, you could be looking at something, really spectacular on the upside. Folks, we're in interesting times, as they say in the Chinese curse, so anything could happen, and it usually does. So with gaps like these and the ranges increasing, we're going to see increased volatility. And of course, the volatility index is back into that area around 15 or 16 now from a low of around 9. So we're going to see some incredible moves here, coming into the future. Now, I was asked this morning, and I've been asked twice since the radio show that I did early this morning, to talk a little bit about the silver situation that I posted in the room for my show early this morning. And I don't know whether it's going to happen or not, folks, but if we take a look at this, if this chart in silver, and this is the kind, let's get this daily chart up that you can see it. This is the kind of trade that you call the orphanage and say, Sister Mary Perpetual, open the purse strings, dear, and let's lay off buying a couple loaves of bread and buy a couple options in silver. Because if we get silver down to this $15 an ounce level, you can see the daily chart here. We have this huge butterfly pattern forming over the past 9 months. We have a 3 drive to a bottom forming over the past 2 years. And if you did that, I'm going to let you do this yourself. Like Twentyman says, defy human nature, do the work yourself. Do a weekly chart on silver, and you'll see that there's a monster retracement number there at $15 an ounce in silver. And boy, that's where you'd really like to see a place where the Indians will be surrounding the old covered wagons, folks, because at that point you're going to get an opportunity that you haven't seen since October or since March of 2009. That will be a incredible pattern if it does fulfill itself. It's headed that way. The $64 question is whether it's going to make it or not. You'll notice that the time frame is late March, but that is just based on the technical picture of the way these things are drawn. It has nothing to do with the astro point. But if you measure the time down between September and December, if you go to January through April, that would take you down. In other words, the equal move between AB and CD would come in early April, right around tax time, around the 15th. So we've got to be very, very cognizant of that if we get to that level, because it's got a real chance of making a pretty good move. One of the things that we discussed, of course, on the show early this morning was the fact that we've been looking at the possibility of a nice move up in soybean oil, which is in fact what we've seen so far. We've had a pretty good move in wheat and corn and soybeans. That's all related to what's happening in South America. There's a drought going on in Argentina, which is one of the major producing areas for soybeans, and that's affecting the market somewhat. Not as much as one would expect, given the fact that that it's dry as it is. But as we know, the news follows the trend, and anything can certainly happen. But this will be most assuredly be a key week, much like we had 14 days ago when we were making our last major astro cycle. Now, Shane has alerted us to the fact that he does a lot of things with the speed of Mercury, which was one of the things that George Baer worked on many years ago, back in the 30s and 40. And if you notice here on this chart that he's looking at for Wolf Trader, that on the 26th of February, whoa, that's today, you'll notice that there is a peak due based on this planetary speed index. So we've got to watch it real close here today and tomorrow, because we're right up against this 61% retracement on the New York Stock Exchange index. And even though the other indices have gone higher, that's not unusual, because we're looking at a situation where it doesn't take much to get these things higher, because you've only got 30 Dow stocks and they're all price weighted. So all it takes is stocks like Boeing, Triple M, and the other expensive ones, to get the thing up in the stratosphere, and that's usually what's happening. With the NYSE, it's not the same, because they're cap weighted, and they give better indications of what the real market is doing. So tomorrow, the New York Stock Exchange Index, we could actually hit it today, because we're up 300 and some in the Dow. We could easily make that today, but we've got to watch it tomorrow as we come into this important lunar cycle that we have going on at this particular time. So, wow, the time goes very fast. We're going to have Arch Crawford here at the break here in Tucson, Arizona, about a mile from the old Pueblo, and he'll be on and we'll be able to see it. What's going on here, and we'll be able to see what's going on at this particular time when we get ready to talk to Sam when the break comes up. And I think the old music will start to play pretty soon, and we'll be seeing what's going on at that particular time. But I sure had a lot of fun at those money shows through the years. Boy, oh boy, I did. I think I did 16 out of the 20 that they did. So. Was a lot of fun. 877-927-6648. Stay tuned for Arch Crawford.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Arch Crawford of Tucson, Arizona on the line. Sam, are you there?
Yes, I am.
Well, welcome to the Tom O'Brien Show. This is Larry Pesavento setting in for him. So no matter what we say today, Arch, it doesn't make a whole lot of difference because they're going to blame Tom for it, not us. Anyway.
I haven't been on his show in a long, long time.
He's at the Money Show in New York that we've been at before. But Sam, tell us what's going on in the market. Give us your 2 cents worth, please. I posted the chart of your VIX index, but just can you give us you've been around longer than me doing this, and So what's your feeling here, Sam? I mean, we have these moves. We have a 1,600-point drop in the Dow. It looks like it's going to go to zero, and the next thing you know, we're back near the highs. What do you think's happening?
Well, the Dow is just, and the S&P is just getting back up to the 618, aren't they?
The Dow has exceeded the 61% retracement. The S&P has gone above it by just a little bit. The New York Stock Exchange Index is very, very close to it. With a close above 400 Dow points today, it would probably reach it, but we are coming into it, and we've got this full moon coming in this week. I don't know. Those have been very good for turns. My goodness, they've been extremely good. But
we're in the positive period of the month end and month beginning. So I'm looking for a high on that full moon on March 2nd with the reinvestment money coming in into March.
So that'll be on Friday, right?
I believe so, yes.
Yeah, it's okay. That's what we're looking at. Now, we're seeing volatility, Sam. You and I have been doing this forever. We haven't seen volatility like this ever. I mean, to see the market jump around. I mean, on a percentage basis, it's not as much as before, but on a point basis, I mean, my goodness, the Dow moves 100 points if you blink your eye. I mean, it's just incredible.
Well, they've been, if you look at the last many months, going back a couple of years, there's hardly any volatility.
That's correct.
It's been scraping the bottom of the barrel, and then all of a sudden we get this huge planetary alignment that I wrote about and posted everywhere on the 24th of January, about the 25th of January, including that there'll be a drop in the market, and the 26th, the next day, was the top day. And then sudden and unusual and unexpected by anybody else collapse.
Mm-hmm. Sam, we're getting a question from one of our listeners about, is there any correlation between, what's going on in the news with all this stuff that happens in the political and the terrorist stuff? Does it have any effect on the market? They're asking that question.
Well, it used to be that when the parties were bitterly at each other's throats, it would be bad for the stock market. But the thing that touches me about all this is that the stock markets and the financial markets generally are being very, very tightly controlled. I don't know if there have been threats from foreign countries to try to destabilize us with screwing around with our markets, but that would be I would suggest that is one possibility, that the Fed and the government are keeping such a tight rein on it. And up to now, the only things that have disturbed the market volatility-wise is the movement of the Swiss franc away from the tie to the euro, and that bankrupted quite a few traders particularly in Europe. And then we had the next biggest thing was the yuan being devalued in China, and we had a couple of days here. It was, I think, close to 1,000 down. That was September, a couple of years ago. Mm-hmm. And then we had Brexit, and we had all the futures that night. They were down 2 days or 3 days, and then recovered. And then there was our election, which was a big surprise to a lot of people, and all the futures were down the 5% limit at midnight or a little while after.
I remember that. I certainly remember that. That was the best buying opportunity in a long time. Arch, we have another question from one of our listeners, and that's regarding the fact that we've had a situation where these eclipses that we had have been the last two that we had marked major lows or highs. I mean, that's got to be pretty significant, wouldn't you think?
Yes, I would say so. It happens more frequently than other days. They're either highs, lows, or big ups or big downs. Over many, many years, you can look back and see every now and then there's one that doesn't show up as anything, and some are just kind of neutral or normal. But some of the biggest moves have been on the when there's been an eclipse on a solstice or equinox, it's been particularly troublesome. For instance, in 1987, we had that huge planetary alignment that was the Mayan calendar date, but it was 7 days later than the one that they celebrated. But it was the tightest five-body conjunctions in at least 800 years that I checked.
That was August 25th, 1987, wasn't it?
24th. The
24th, yeah.
Our high, 24th was the high close, and that was my prediction date, plus or minus 3 days.
That was the harmonic convergence where everybody in California thought they were going to fall off into the ocean, as I recall. I was living in California at the time, so I bought a rowboat that weekend just to be safe.
And meditating and
yeah.
That's always a good thing, but they had the wrong date because the big astronomical alignment was later on.
Well, that led to the big crash.
24th was the day.
Sam, the question we're having from one of the other folks here in the den here from across the pond, it's up pretty late for them, but they're asking is, will there ever be another crash? And do you see one coming?
Well, certainly.
Certainly that'll be coming, or certainly you see one?
Well, I don't see when it will be exactly yet. But every crash so far has been in the same 40% of the Mars-Uranus cycle, and we'll be in that till just about the end of this year. So I really expect one this year because the technicals and the things like margin debt and put-to-call ratios and all of those things got way out of alignment and stayed there for a long time, which was very confusing to technicians and to me. But I think it is a sure thing that this far out of alignment will be that far out of alignment on the downside sometime, and I suspect it'll be by the time we get through with the Mars-Uranus crash portion of the cycle.
Mm-hmm. Do you think the crash will be worse than the one we had in 1987 and 1929? What is your feeling on that?
I think eventually we will have that, whether it's the first one or the next one.
Okay, can you stay with us for the next segment, Arch?
All right.
We'll talk about bonds when we get back. Arch Crawford from Crawford Perspective, 877-927-6648.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Okay, we're back, folks, and this is Larry Pesavento for Tom O'Brien. We're visiting with Arch Crawford of Crawford Perspectives, Tucson, Arizona. Sam, one of the people that in our den here has asked a question about your thoughts on quantitative easing and also the amount of student debt that's out there. Do you think this will play some type of a role in this coming volatility?
Well, of course. These things have been carried way further than everything else. I mean, the student debt has gone past credit card debt, which is really totally amazing to me. Mm-hmm. and all forms of debt are way out of alignment. And basically, I'm saying that the troubles that became evident in 2007, 8, 9 have not gone away, and they have not fixed the problems. They just papered it over, or scotch tape and baling wire, and it'll all come apart one day, probably while we're still alive.
Well, you got to put an asterisk on that one, buddy, because we were both born in the same year. Sam happens to be born on the birthday of J.P. Morgan, wasn't it, Sam?
That's right.
Yeah, April 17th, is that correct?
That's right. Mm-hmm.
Hey, what a lucky guess, huh? I'll have a present for you this year. Arch, we got a question about your studies in astrology. Of course, you've been doing this astrology thing for many, many years. Did you ever look at the works of Evangeline Adams?
I never did much with what she did. I did my own research and founded a whole new study by comparing. I'm the first person I know of who ever calculated percent changes in the Dow Jones with almost every planetary event.
Mm-hmm. Wow, because you started doing astrology way back in the 60s, wasn't it, Sam?
Well, I read about it. I was a technical analyst at Merrill Lynch when I read about people using astrology in the markets on the front page of the Wall Street Journal the day before my birthday, April 16, 1963.
Wow.
And I went out and I said, that's a hoot of an idea. And I went and met all the people that were mentioned and bought their books or books that they recommended if they didn't have books of their own.
Wow. They had electricity in New York then, didn't they?
What's that?
That was 1863 or 1963. I can't remember.
Well, let me think. I'm pretty sure 19. My memories of the 18s are very dim.
Yeah.
But the 17s are pretty good. I think I remember people from the 17s.
Sam, we have one other question from one of our listeners, and that is about the lunar cycles. We've seen these operate really well over periods of time. Sometimes they shift where they don't work right away. But of all the things I've seen, that seems to be one of the more accurate indicators for stock market tops and bottoms. Is the solar or the main new moons and full moons seem to be the best, and when you have these eclipses along with them, they actually have more power. Do you agree with that?
Absolutely. It's the tidal force. The new moon and the full moon are the high tides, and it affects earthquakes. And people don't realize about the tides in the water, but there's also tides in the land and tides in the air. Now, if John Nelson and I discovered independently that if you get a lot of solar bursts, active particles from the sun, at the same time you're getting the high tidal force, which is new moon, full moon, and more so at the perigee and at the eclipses. That's when people really get crazy, because you get the charged particles in the upper atmosphere being brought down low to the earth, and that's when people really go nuts when it's a high tidal force and solar energy hitting the earth.
Sam, a question we have about the bonds. Are you looking at long-term rates going a lot higher here during 2018, 2019?
Well, I would say on the short-term basis, the 30-year bond broke the 200-day moving average, and it went down to a long-term rising trend line, which is sitting on right now, which I would kind of expect a bounce in the bond, dip back down somewhat in the rates, and then later, if that trend line breaks, then the rates will go much higher and the bonds will go much lower.
Okay, now the next one I have a strong interest in.
Long-term weekly trend line and watch it closely.
Okay, the next one is has very dear to my heart, as I'm sure it is to you, and that is the outlook for the gold market. What do you think is in the future for gold for the rest of the year?
Well, I wrote a piece on the gold the other day and sent it out to people and posted a bunch of places. Gold short-term technical picture. Gold appears to be making a near-term bottoming pattern. The pattern is quite similar to the very long-term pattern. The two are fractals in different time frames. The simple technical pattern will break out upside with a COMEX close above 1335, which I think it just did or is doing right now, and be much improved with a close above 1340. It was almost 1343 this morning, but it's backed off and is now only about 1334.
The silver looks interesting if it could get down to the $15 an ounce level, I think, on a long-term basis. What's your feeling on inflation, Sam? Do you have anything astrological that says we could be looking at a pretty big burp in inflation where we might get these old 3-4% levels that we used to get, during the 90s? What's your feeling on that?
Well, we have Neptune in the sign that it rules Pisces, so that anytime that could, when that gets activated by other things, that could happen, yeah.
Well, listen, we want to thank you for being our guest today, and you want to tell the folks how they could reach you if they'd like to see a sample of the Crawford Perspectives newsletter?
Well, the easiest way with the fewest letters is to Google Arch Crawford and put it in parentheses so that it cuts out archaeology and archangels and all that. And my website is actually CrawfordPerspectives.com, but that's like 31 letters. So it's easier to Google the name.
Yeah.
But the phone number is 520. This is if you want to order or get. Well, I can give out a free copy. If
well, Sam, I've known you 35 years, but I've never thought you as an archangel.
That's I was before I was born.
Ah, there you go. That makes good sense. But listen, we want to thank you for being on the show today, my friend, and live well, and may God bless, and hope to see you soon. And thanks again for joining us, Sam.
I'll be delighted to see you or hear you, or both.
All righty. Arch Crawford of Crawford Perspectives. We'll be back to wrap up the Tom O'Brien Show. Larry Pesavento for Tom. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, we're going to take a quick look here at the Dow Jones Industrial Average. We're only 200 points away from the 78.6% level. That's around 25,800, I believe, is the level that we're looking at. Let me double check that just to be sure. I believe that's what it is. Yeah, 25,868 is the number we're looking at. So we're a couple hundred points away. So keep a close eye on that. One other memory from the old days at the Money Show in New York. We were at our favorite restaurant, Patsy's, on the Upper East Side, right around the corner from Trump Towers. Italian place that opened in 1941, and the head waiter went to school with my dear friend John Maresca. So anytime we went to New York, he would take great care of us, and we were having dinner there. And sitting right next to us was Tony Bennett and his agent and another young lady. and the lady in the back of the room was having a birthday. She was in her 70s, and he walked back there and actually wished her a happy birthday and sang a little quick verse of happy birthday to you. And then when he was leaving the restaurant, he picked up the check for everybody in the restaurant, about 50 people. Later on, we found out that he's such a big promoter of Patsy's Restaurant, the restaurant actually picks up the check. So it was really great, but it was one of the fun moments of the time in New York. But great city, got to love the place. Anyway, watch the market really closely this week. As Sam said, Archibald Crawford said, we've got this big date coming in. We have Arch Crawford in tomorrow on my show on Wednesday. Tomorrow we'll have Stan Harley on my show early in the morning. And then later in the week, hopefully on Friday, we'll have Tim Boast from Financial Astrologer down in Sarasota. So we'll be able to, be able to see it. But Tom will be back on the show, I believe, on Wednesday. And we have to salute Tom for putting on a great group here of great folks. Stay tuned for Basil Chapman. It's finally you get to listen to Johnny Carson. Mr. McMahon is going off the air. So, amen. Live every day in an attitude of gratitude, and may God bless.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Basil Chapman sitting in for Tom O'Brien. Tom is in New York at the Marriott Marquis. It is the expo, I believe it is, and you can go visit him there. I'm sure you'll love to see. I think he's giving a talk tomorrow. Be back Wednesday. So, Basil Chapman, I do the Tiger Technicians Hour at 12 o'clock every day, noon to 1 p.m. Same call-in number, 877-927-6648. And I have a daily newsletter called The Opening Call. Very comprehensive newsletter. Comes out every morning by 8:35. You've got your 5, 6, 7 charts, or sometimes more than that. Just looking at what we think are the focus points and what I think are the stocks and indexes that we want to really get to grips with technically, and what we will have as positions, and we look at those positions every day. So the Dow closed up almost 400 points at 25,709. For us, it was very important. In the Chapman Wave methodology, I just slide this across here for a moment. There's a very simple technique. You identify the lowest low bar, and you merely count each successively higher bar after that on the upside, alphabetize them, uppercase on the way up, lowercase on the way down. We want to get to the fourth highest peak. That's peak A, B, C, D. At D, other things can happen. It can still go to E, F, and G, but the fourth highest peak is really the objective, and then we use other techniques. Well, we went to a peak D at the high of 26,616 on the 26th of January, pulled back very sharply, had what I call a Chapman wave 2-bar reversal, pulled back. We were fortunate that we did manage to go short after that break to the downside, and then we reversed to the upside. Now we are long on the day after the low. It was made on the 9th of February. We're long, we're still long, and what we needed to see, and this is really important, I wanted to see a break above the 25,432 high that was made right here on the 16th of February. One of the reasons is I wanted to see how strong this leg C would be. This is a very strong leg C. It allows me to put an up arrow here. Now we're gone from a buy signal to a buy mode in the Dow. I wouldn't be surprised if we have a little bit of choppiness going into when the Fed talks on Wednesday, but this is very important. Why? Because now we are at 25,709. We are 900 points away from the all-time high. That's doable under certain circumstances, but most importantly, it's this. So the daily chart on the left, the weekly chart in the middle here shows you that we made that high at a peak E, that's the fifth highest peak, plunged 12.2% to 23,360, and then had a rally, and only today have we started what I call a gray leg A. Now, I'm going to show you some charts that are going to put this in perspective. Daily, weekly is improving. It's not great. It's just improving. Daily is very strong for now. And the monthly chart looks as if, you know, ho-hum, if you went away for a few weeks and you came back, you left and the Dow was at the high of 26,616. Big deal, 900 points down. But wait a minute, we went under the 9-period exponential moving average, but the MACD did not budge at all. It is still very strong. Stochastic above 80% is very good. Above 90% is excellent. At 95% is really outstanding. So this is the key, is that the monthly charts are still very strong in all the indices. So let's go on, and now we can do this a little quicker. We'll go to the S&P. The S&P is up 32 at 2779. Also broke a downtrend line that I was showing in the previous chart. This is very important. It's a very strong leg C, and it has gone above the 50% level. Retracement here as well. The weekly chart is not strong at all technically. The monthly chart is still very strong. So what we're looking at is for the Dow. This is very important in the 25,700s. It means that if there's a close this week, any day this week into the 25,850 level, there's just a really good chance that we could go towards the all-time high. And the key support now for the Dow is at about 25,300, and the S&P would be at 27,080 right now. The key support would be at 2750. So now let's go to the QQQ. Why? Because as I said, if you were away for a couple of weeks and you came back and you actually bought the Qs right at the high, 170.95, you were the top tick on the 26th. We are trading at 170.40, 55 cents away in a V-shaped pattern. So a couple of things happen in this particular pattern. In the weekly chart, you can see the technicals did improve. They're not great, but they did improve, and the monthly chart is still outstanding. What's really important is, because this leg C, if there is a very, very sharp, swift move, and we can see the QQQs, which is the power shares, NASDAQ's the NDX 100 really, if it can trade in the next, I'd even give it until Wednesday week, next week into March, if it can trade into the 172.80s, that's going to suggest we've raised the base, and it's going to be very, very positive. Let's look at the IWM. IWM at this particular point is the Russell 2000 trading. It's weaker. It's gone to a leg D already. It's taken a lot of effort to do that. It's the weakest link so far. But what's really important is the SMH, the semiconductor index, is like the QQQs, very strong. You need the semis. They've led the market up and down for the last 2 years. If they can break above 108.56, the all-time high on the 23rd, that's going to be very important, and they are right now at 107.79. Now, this is going to be very interesting. Gold attempted overnight to have a very good rally. It looked good, and then all of a sudden that fizzled. Is up 4.7 right now at 1335, and this is going to be key. It looks to me like gold is setting up in a trading range. It doesn't look awful. It doesn't look great. It's just stuck in this trading range, and the range will be between 1352. No, I'm going to say 1347 to 1352 on the upside, and 1327 to 1320 on the downside. A break of either of those levels would mean that that trend should continue. But this is very interesting because if you look at the dollar hasn't gone anywhere. It's kind of stuck in this range as well. And the dollar's down 3 cents at 89.85. So the 3 ticks that it's down, this is very important because they held above the 9-period moving average. The weekly chart is improving a little bit. I just don't see anything just yet for the dollar. It's just stuck in a range until it can get into the 91s. I'm just going to say range bound. And now we're going to go to crude oil. Crude oil had a very nice day. It is up 45 cents at 64. This is also in leg C. Here's that downtrend line that we've been looking at in the other charts. And that downtrend line, it comes in at about 64.5, 64.50. We'll see how that's going to be handled over the next few days. But the chart looks good. And the weekly chart is actually not bad at all. And the 200-period moving average of 67 is like a magnet, but it'll only kick in as a magnet if crude oil can close above 65.50 in the next 2 or 3 days. So Basil Chapman sitting here for the one and only Tom O'Brien. I'll be right back. Dow's up almost 400 points. S&P's up 32. We'll be right back after these important messages.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So a couple of things that we want to look at here. The XLK, this is Basil Chapman sitting for Tom O'Brien, and the XLK, which is the S&P Select Spider fund is at a new all-time high. It's in leg D, all-time high at 69.36. The weekly chart broke out. Monthly chart is still only in leg C, and that says it's got D to go. That's really important. So within the context of the tech area, that's kind of leading. And if you look at things like the IYR, it's up a little bit, but they're really not a very good chart. This is the Dow Jones US REITs. If you look at the HGX, which is the Philadelphia Housing Sector Index, it is nothing to see here. And I think that has to do with the rates. And if you look at the rates, look at this, the TLT tried to rally today. It's only up 4 cents at 118.17. But this particular chart, which I show my subscribers every week, and we actually discussed in my show today, the weekly chart has gone to a C, and it should go to a D. And I'm suspecting that we might chop around a little bit here. At 32.21 was the high of last week, 3.221 in the 30-year T bond fund and yield, that is. And what you're looking at is that you've got a D in the 10-year. The brown one is a TNX. The 5-year is the FVX, which is the 5-year T note yield. Also in a D. I suspect we got a little bit of a pullback. We'll see what the Fed says on Wednesday. My suspicion is that the Fed is going to say there's no real change, but we're watching very closely economic conditions, and our bias is to raise rates, and we'll see how the market handles that. But because this is a C, if there's a new high above 32.21 this week, this extends the C. If there's no new high, then I suspect within 2 weeks we will see a new high with yields going even higher. Within the context of what we're looking at, I haven't covered some things. I need to just show you high-grade copper, which is holding just steady within the 3.22, within the range of 3.27 and 3.20. We'll see how this plays out over the week, because it's not showing strength or weakness. The technicals are kind of okay, but it's at the high level of the weekly chart. And if you look at the monthly chart, look at this. This is very interesting. These patterns, left side, right side, price, time match. It's a cup formation. You've got your, I've got this as the midpoint right here. It's not the actual low. I've got a little bit above. And it says that by May, there should be a test in copper of the 3.46 area, as long as 3.31 is hit within the next 2 or 3 weeks, just to be able to break out to the upside. Otherwise, we're just stuck in this range for a little bit longer. So that's what we're looking at. Now, what is very interesting is you've got, within the context you've got of the markets, we were talking earlier today when I did the show with Tommy O'Brien, we were talking about the effect that Amazon has had and how the effect it's had on the retails. Well, if you look at Macy's, if you look at the daily chart, it says, hey, this is pretty good. Look at that, nice. It's got a V-shaped pattern, trying to retest the previous highs in the mid-27s. It's at 27.45. Weekly chart says, whoa, what a nice rally from 17.41 goes to 27. And then you look at the monthly and you say, Macy's? Retail, oh my goodness, from the high in July of 2015 at 73.61, it plunged down to 17 and is trading at 27. Nice percentage off the low, but a horrible percentage off the 73's high of 2015. So this is going to be very interesting. How does retail resolve? And if anyone's been to, certainly on the Northeast here, if you've been to a mall, a shopping mall, it's even hard to find parking. So people love to get out, they love to be there, but the shopping, I would not be surprised if the malls have suffered somewhat, but actually what's happened is there's been an increase in buying because Amazon has made it so easy to just click and buy. And that probably will be reflected in higher numbers for people with credit. So there's a higher credit is out there, and we'll see it in sales. So the question I also had earlier in the day was, what about something like a Ford? It looked terrible, and at the time it was trading at about $10.75, I think. And I said, you know, right here, if you go anywhere, certainly, once again, I'm going to talk about the Northeast, not the whole Northeast, at least, and I'm in Boston, but in this area, I've been looking at just part of like the inquisitiveness that I have. I want to see what's going on in the auto industry. So I've been to a lot of dealers over the last couple of months. And I have to tell you that there are a lot of people there and a lot of people are leasing. So leasing is the thing. You don't even know what the price of a car is because or SUV, because it's all tucked away with all these different offers that they give you. But when you finally, what I hear from people, when you finally tally up the total with the lane adjustments and the brake adjustments, all these different yellow lights that flash and beep, you could really add to the cost of an automobile. And all the different floods that we just recently had 600 cars in a terrible rainstorm, and the 600 cars were wiped out. That's really helped the auto industry right around the country. So I'm looking at this and I said, you know what? It's not a great chart, but you could nibble at the 1070, 870 level, what it was earlier on. But you have to treat it as an entry point because Ford looks terrible. But the actual charts it's holding very steady since it made its $10.19 low on the 6th, and it's trying to rally. And you've got a very limited risk here. If you have even as it stands right now, I would put a stop under 1089. I'd have a fairly tight stop. Certainly to start off with, you could have an 80-cent risk, but within days you should narrow that down a lot. And I would look at this and say, you know what? If Ford is able in the next few days to break above 11.04, that was the high on the 7th of February, it could have a nice bounce, and just treat it as a bounce. And because I think people are buying a lot of cars because it's so easy to lease, and lease is the way to go. And if you're looking at ads, you see these ads and they've got $150 or $230 and you say, oh, that looks fantastic. Of course, when you finally do the adding up, when everything's done, they always have to make their money up somewhere because there's a certain amount you have to get over 3 years. So it's going to be very interesting because there's been just as Amazon has changed buying and airlines changed the whole concept with a la carte paying for everything. All of a sudden, you don't see the airlines going bankrupt anymore every other month. I think a la carte is permeating every single medium. So we'll see what it does in the auto industry. I can see it going into healthcare. I can see it going everywhere. So I thought I'd just go through that because I had a couple of questions about this. Within the context of the markets, what would I look at for a big break to the upside so that the S&P and the Dow actually make all-time highs? Well, look at this. If you look at the VIX index, the volatility, and this is what I show my subscribers every week. We discuss the VIX, we discuss all these different aspects. And if you look at the VIX, it's still very high at 15.80, but historically, because it's been down in the 11s and 10s, but if you look, it was at 50.30 on the 6th of February, and it was there with a worry of rates, a whole bunch of things, but it wasn't really huge issues. That's the reason why I think the market sprung back so quickly. So watch the VIX at 15.80. If it drops further over the next few days, starts to go into the 14s and 13s, that's going to help the market a great deal. Bouncing back into the 16s says, whoops, hold on. We've got a little bit of a digestive couple of days. I'll be right back. Basil Chapman for Tom O'Brien. Dow is up 400, S&P up 32.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman sitting in for Tom O'Brien. My show is at noon every day, noon till 1 p.m. for the Tiger Technicians Hour. My newsletter is called The Opening Call Daily Newsletter, very comprehensive, and we have a number of positions on. I was asked about GM. We actually are long GM from the 34s. It's trading at 41.54 right now. It's the same sort of rectangle formation as Ford. Had a very nice day today, up 59 cents at 41.50. What's really interesting about it is that the weekly chart, that's the middle chart here, if there is a push in GM over the coming, I would like to say 2 days, but I have to give it until Friday. Let's go until Friday. And by Friday, if there is a move towards the 50-period moving average of 42, that'll start to improve the weekly chart a lot. And that's what it needs. It needs to climb above the 9-period exponential moving average. It's really been in a sideways consolidation since the 46.76 high. We actually had two positions. We took nice profits, 20% in one position. Now we've still got the other position from lower down. And it's making lower highs and lower lows. I don't like that. I want to see a rally. I want to see it up into the 42s, and I want to see it fairly soon. We'll see what happens there. What's most important here is that the monthly chart is still very, very good. It held the 9-period exponential moving average at 40.12. That's that black line there. But it's going to start to show some strength fairly soon. What's also very important here is when we're looking at interest rates, if you look at the housing sector, you'll see that the HGX, which is the Philadelphia Housing Sector Index, has got a little bit of a bump to the upside. In a way, you can say, wait a minute, doesn't that look a lot like the Ford chart or the GM chart? Well, you could say so, interest rate related, both automobiles and the housing. But what's really important is that we've got this potential peak F in the monthly chart. We've got a G in the weekly chart, and we've got an F in the daily. And that's saying that the technicals are way weaker. Look at the weak technicals in the weekly chart here. But the monthly technicals are are actually holding quite nicely. So I'm just going to say to you, I think housing has had a break. They had a fantastic move. The HGA index went from under 280 to over 360 to 368. Was that right? 369? Yeah, 369.15. This is an important period. I think that the housing will go into the spring, maybe in another month or so. Housing will be starting to spring back. We'll see what happens. But the charts are kind of similar, but not really. And if the question I had also was the XLF. Could I look at the XLF? Yeah. Very nice move. This is a leg D in the daily chart of the financials. This is the S&P Select Financial Spider. It's gone to a D. It's under the previous E. Now, what I don't like in this particular pattern is that I saw that in the IWM, already watching it in the Dow and the S&P, is I do not like to see a peak D way under the previous high if the technicals are weak. But in this case, the technicals are actually strengthening. And if you're coming off a bottom, obviously you're going to have 4 higher peaks. And if it keeps acting very well, you'll have another 4 higher peaks. So I have to look at this and say, check the monthly, the weekly chart, MACD's holding okay, stochastic's trying to turn up. Just watch price. And the XLF is saying, we're in play right now. We've been rallying since the low of the 9th, since the 26s. We're at 29.56 right now. For our subscribers, we actually have a bank stock. It's done very, very well. And I'm looking at this and I'm saying, you know, XLF, let's go look at Goldman Sachs. Goldman Sachs, I think, Goldman Sachs is almost at an all-time high. So made a little double top at 273.79 on the 29th of January, 273. Plunges down to 30 points. Plunges down to 239. 279, 40 points. So that's what I'm just 18% or something. So it's climbing back, and the Q's had an 18% decline. So they've kind of, in a way, maybe they're done with it. So Goldman Sachs is acting extremely well. I would not be surprised if it retests in the next couple of days. It retests the all-time high in the 273s. And I've only got it in leg B. This is a very good-looking stock. Goldman Sachs, nice-looking stock, has very strong support now in the 264 to 263, 262 area. So just wanted to go through that. I had a question about that. I was asked also about the IYT because UNP had a very strong move up. Yes, nice, 194 up 3.4 in the iShares Transportation Average ETF. This is a new leg B. It's the start of something. Well, the reason why I say it's the start of something is that it had really a 206 down to 176. That's quite a hit. And here's the trend line resistance. So trend line resistance says that if the IYT by Friday, I say Friday because I'm also looking at the weekly chart, is able to pierce the 96.70s resistance and get into the 199 to 200 area, that's really going to improve the weekly chart. In fact, if the IYT rallies very strongly, I like to see the two work in tandem. Look, the transports made a high on the 16th at 206.73. The Dow made its high on the 26th of January at 26,616. So what we're looking at right here is that the low was made in unison on the 9th. Very often lows are come together. But you want to see this move much higher. I want to see the transports confirming the rally in the Dow and the S&P. I was asked, would I look at the NYA? The NYA is the New York Stock Exchange, a very broad New York Stock Exchange. This is in leg C. It's improving a lot. The weekly charts, they're all look the same. The ones that haven't gone to almost to the highs, like the Qs, the SMHs, the XLK. Otherwise, they all look like they're improving. Weekly charts have a lot of work to do to improve, but they're always much slower. What's really important is how does the monthly act, and we've got a few days to go before the end of the month. So far, the New York Stock Exchange, this is the very broad New York Stock Exchange, up 115 at 12.999. Nice number, but what's really important is I want to see it right there. I want to see it in the 13,200s because that's going to say confirmation for the move to have more legs to the upside. So this is a very important period for a couple of reasons, because we've got the Fed, you've got earnings reports. Toll Brothers comes out, I believe, tomorrow morning, and the weekly chart has made a top. Monthly chart hasn't finished the month yet, but it looks like it's kind of toppy. It's rallied some since the low in the 43s. It had a high of 52. I'm watching Toll Brothers. How does it react tomorrow, and how will it help the HGX? Because if yields pull back a little bit, that gives the home builds a little bit of room to breathe to the upside. If you look at the XLB, which is the, look, here it comes. XLB is S&P Select Materials, Spider Fund. They're all looking the same. Leg C, doing okay. Daily charts improved a lot. The weekly chart still kind of hesitant. Monthly chart says, oh, there was a pullback. Gee, didn't even know that. Because intra-month, we went really down from the 64 area down to the 56. So that's 8 points. There again, it's the same kind of percentage drop. And now we're trying to rally back. Monthly chart is going to be very important. In February, do we see monthly peaks taken out from January, or are they going to make peaks at this time? Do they continue the leg up or not? I'll be back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, folks. We're back. Basil Chapman sitting in for Tom O'Brien, and you can check Tom out in Manhattan at the Marriott Marquis at the Traders Expo, and he's there, and I think he's giving a talk tomorrow morning. So Netflix, I was asked about at $2.90 for folks. You should check out the day. We've still got another with the rest of the week. It's free. It's just great questions, great answers. I've already answered maybe 2 or 3 questions from the den during the break. Netflix is trading up 8.22. It broke out. I've got it in a leg B. It should go higher. The weekly chart is in D and the monthly chart is in E. It is very strong and it's helping the QQQs. So the support, if you're long, stay long. The support right now in the very short term is between 279, 273. But if you're holding it as a longer term position, watch the whole 240s. At some point, if it comes back again, breaks into the 240s, that's where this time, if it comes in the 240s, I think it's going to go quite a bit lower. But in the meantime, it's acting very well. If you look at Amazon right now also made a new all-time high. It's in a brand new leg C to the upside in the daily chart. Let me get rid of this right here. Okay, there we go. It's in the weekly chart. A, B. This is leg C in the weekly chart, looking very strong. And monthly charts in leg E. So if you're long, once again, it's the same thing with Amazon. If you're long, just keep holding it. It's got great support. The 1472 9-period moving average to 1452. And what's really important about this is that I wouldn't be surprised if the next pullback is the one that gives it the greatest test to the downside, because if it only pulls back moderately, and I'm not talking about just over the next week, I'm talking about over the next 3 to 4 weeks. If Amazon is still holding above the 1450s in 3 weeks' time, and in fact is up at the 1580 to almost 1600 area, I would suggest to you that Amazon is telling us that stocks like Macy's and the retail stores are having a very tough time, and they've made such strides that you've got to consider that this is the behemoth. This is the one that has already changed the whole industry. But in a sense, what's happened is, for instance, they've taken over Whole Foods. And I go to Whole Foods quite a lot. And I must say that I'm not impressed. I think that there's a deterioration because they've cut back on the choices. And the whole object of Whole Foods was there was something special. It's not quite as special as it was. I think they're still trying and they're still finding their way. But at this particular point, there's been a disruption. I personally am not that happy with the disruption. I don't think it's working out that well. Apple, of course, with Buffett on TV all day, or all morning at least, from what I hear, talking about Apple and that he's got huge positions in Apple. Apple at 180.10 was the high that was made back on January the 18th. It goes from 180 down to 150.24, 30 points. That is 18% there again. And what happens is it tries to rally, goes back, and then it just stalls. And that was the big clue. Was it going to stall in the 174 area? No, it's not. The technicals improved. There's a chart wave squash which says this should go even to a leg C and then take a little time before it makes a D, and that's where you got to be careful. But the V-shaped pattern, this is very unusual to see weekly charts with a V-shaped pattern like this that continue higher. Usually when you get to the top, you make a double top. I used to call it the Groucho Marx eyebrows. It's got this V-shaped pattern. If Apple is able, by the first week of March, the whole of the first week of March, trading week, if it's able to break into the 182s and hold there, that'll be really positive. If it has a little bit of a further rally and then it stalls at 180 to 181, I've got to watch this real closely. But so far, it's acting very, very well. Technicals in the daily are very strong. Weekly technicals are just okay. Monthly technicals are good. So I just wanted to mention that. Now, I had a couple of questions about GBTC earlier in the day. GBTC. This is a very unusual thing because you have something that trades virtually 24 hours, right? That's Bitcoin. This is called Bitcoin Trust, investment trust. It only trades during market hours. Well, for anyone who's traded Bitcoin, I've not, because I've followed it very closely. It could do anything overnight. And it had, when it was going to the 19,000s, almost 20,000, it did that. Then it made a round number low of 6,000.00. That's the print. It actually made a slightly lower low, but that's the print that you get in the Bitcoin that I'm being following. And all of a sudden it rallies to 20. It rallies very strongly. Now You've got GBTC at 17.82, up 61 cents. It made that peak D with a doji candle. It's had a pullback. It's hugging the 9-period moving average. I said to someone, one of the subscribers, which I answered a question during the show today, I said, if you want to start a position round about here, you've got to have a fairly tight stop, and it's got to move very quickly. It's got to get to the 18.75 or higher level. I would have to say within 2 days without hitting the 9-period moving average of 17.34. And then it's got to still push higher, and you are subject to overnight whims. In other words, if Bitcoin drops 2,000, this thing's going to gap down in the morning. What do you do about it? You have to wait and see it gap down and say, oh, I could have got out last night. Well, you can't. It only trades during the day. So I recommend only a very small position. Use it more as an experiment to see how you can trade with the chart patterns and if it's actually following those chart patterns. But as a trading vehicle, it's more you manage to get the low. If you manage to get the high or the low, you want to stay in that position for a while. And in this case, the low that was made on the 5th of February at 9.60, after being up at 38.71 in December, that is a huge decline. And normally after such a decline, there are H patterns that try to form, that turn into M patterns until you get a very sharp V-shaped recovery. I don't think this is ready yet for a V-shaped recovery. We'll see. But that's the only way I would do it. And then you'd have to raise the stops somehow or other, but you can get stopped out overnight. This is a very dangerous vehicle, dangerous enough playing Bitcoin, let alone a stock that only trades during certain hours of there, 6.5 hours. This is dangerous. But if you are interested, that's it. Question about GE, I dealt with that earlier on. What I said is GE is, at this particular point, it's gone from trying to hold in the 18s and 19s down to the low that was made today at 13.95. And the question was, what should we do for people who have it as long-term positions? And my suggestion was, you could give it another couple of days or whatever. It's ready for some kind of a bounce. It should have a bounce. But if there's a talk about the breakup, it has to be a viable talk about really breaking up, and you want to see maybe a 1.5 to 2 point spike to the upside. I would use that opportunity to lighten up. And the reason why I say to lighten up is I don't think it's ready for the big move. And if there's talk, it's just talk. They haven't done anything. And then when it really gets down to doing something, that's when you want to become more interested in it. Looking out, I'm sure GE will be back at some point, but it's not a good stock, not a good looking stock. Right now, it has a potential to maybe bounce a little bit. We'll be back straight after this break. Basil Chapman sitting in for Tom O'Brien. Dow is up 400, S&P up 32, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7. He's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
This is the Dow. This is the Dow daily. This is the Dow with the MACD and stochastic, the technicals. I just updated it for today. This is leg C. What's really important, you see the V-shaped pattern that's unfolding right now. It makes the next level of the 25,800 to 25,900 level really strong resistance to overcome. But the support so far is really at the 25,580 to maybe 25,520 level on the short term. That's a trend line right there. And what's really important about this, you'll see that the MACD finally crossed positive. The MACD histogram, that's a little green line there, is positive. That says that the conditions that have been met for the MACD to give what I call a buy mode, and that the stochastic has gone from the 20% level. It's now at 66. I'd prefer if it was even higher. I like to see it above 80%, so 66 is 66, 68. Yeah, it's okay. But what's really important is prices move very sharply. So the parameters I'm watching are for the Dow. What we should see tomorrow, I believe the Fed, the new chairman is going to have... tomorrow, there's a Fed Powell to testify Tuesday rather than Wednesday. So that might have a little bit of an effect on it. We'll see what happens at the end of the day. But the key support that we're watching here will be in that 25,500 area. We'll watch what happens. Most importantly, the weekly chart, and this is what I show my subscribers every week, every Saturday. I show them the daily, the weekly, the monthly with a whole discussion about it. The daily is in a buy signal. Now it's gone to a buy mode today. The monthly chart is in a sell signal. That's just an explanation that it had a 12% correction, needs a lot of work to improve, and the monthly is still very positive in a buy mode. So there's some mixed signals here, but there was a 12% correction in the Dow, 18% in the Qs. That's pretty big. We haven't seen anything like it. So that, and the VIX index pulling back says you've got some good support coming in here. We'll see how that lands up, and we should be seeing higher highs in the S&P and the Dow, and the Qs should make new highs this week, and then we'll test everything else. Have a great day. Check out my opening call, and see you tomorrow. Have a great day.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.